You're listening to the Today's Conveyancer podcast, the leading source of information for residential property lawyers in England and Wales. Don't forget to subscribe and sign up to our free newsletter at todaysconveyancer.co.uk. You can also follow us on LinkedIn and Twitter.
Hello and welcome along to the latest Today's Conveyancer podcast. Today I'm talking about anti-money laundering. It's a favourite topic of the podcast and we've covered it a few times before. I'm talking with Sebastian Harrison, the Deputy Director of AML and Sanctions at the CLC. And it's going to be a slightly different discussion today, I suppose, in that we have the regulator's view of proceedings. And I'm very grateful for you joining the podcast, Sebastian. Thank you.
Thank you very much. It's a pleasure to be here.
I've done a very brief introduction to you, but perhaps in the first instance, you could tell us a little bit about yourself and your role at the CLC, please, Sebastian.
Yeah, certainly. So I've been at the CLC for just over 4 years now. I think I just got that anniversary reminder from LinkedIn. For the majority of that time, I was working in the monitoring team. So I was a regulatory supervision manager, which the CLC has kind of varies depending on when we're talking about, but usually about 3 or 4 of these supervisory managers who have a portfolio of practices that they look after, and they undertake a wide range of monitoring, which can be inspections or checking client account documents and that kind of thing. And then bringing us right up to the present for the last year and I think about 3 months, as you said, I've been responsible for AML and sanctions at the CLC, it's a very wide remit, but broadly speaking, it can include creating guidance for AML for practices. We've got an AML toolkit, which is a bit of a one-stop shop for all of our resources, information and guidance. So we do a lot of work to make sure that that's kind of up to date and relevant for practices. And I also have a lot of input into inspections where there has been an AML element to it. And I also retain a bit of a caseload as well, although it's a little bit reduced compared to previous years.
So plenty to be getting your teeth into. I guess at the outset of the discussion, I've said that we're going to talk about anti-money laundering today. Probably worth very, very quickly recapping what we mean by anti-money laundering. There's lots of acronyms that float around about this. We talk about AML, anti-money laundering. We talk about know your customer, KYC, ID verification, source of funds. That's a much more recent development, isn't it? Can you give me a sense of what the CLC's definition, for want of a better word, of AML is?
We kind of take AML to be the measures that practices can take to prevent criminals from laundering money through their practices, and of course, because of the services that we regulate, that primarily refers to conveyancing. That can be residential or commercial conveyancing. Those are the two really which have been identified as being, as high risk by the government in their various national risk assessments which they've done. However, we also regulate probate as well. We also have some permissions as well which are relevant, such as trusts. So there are some CLC practices who kind of engage in these services, if you like. There is still certainly a risk of money laundering there, but the CLC's view, and you could probably see that in our sectoral risk assessment, which is in our AML toolkit, is that there's a higher risk of money laundering in residential and commercial conveyancing. And that primarily is because money launderers, or those who are seeking to hide illicit funds, can clean money in a single transaction. And of course, the UK property market, as we've seen, is a very attractive proposition for certain individuals who've been trying to hide certain monies for a long period of time.
So let's dive right into the key issues that face conveyancers and property lawyers from a compliance point of view as we look ahead into 2024? I want to come on to what the regulatory challenges are, but quite specifically in your role and in your monitoring as well, what are you seeing as the key issues that face conveyancers right now?
I think at the moment I'll say source of funds and source of wealth. That's probably number one on the agenda. I think maybe I'll go back a little bit and just say that you're right to ask this question, I think, because we often find that when we do these monitoring inspections, we do look at all parts of the code. We don't just look at AML, and consistently AML seems to be a problem. It seems to be an issue. We see a lot of kind of findings of non-compliance within the AML area, and it really stands out when you look at other areas of the code like complaints code or disclosure of profits and advantages, or something like that. So yeah, so absolutely source of funds, source of wealth, and really we're concerned with conveyancing transactions where there's a purchase element, so the client is contributing money to the transaction, or they're using, maybe it's a mortgage and a contribution, or there's some kind of third party who's contributing to the transaction as well, like a gifter or something like that. And some of the issues that we see there are the source of funds or source of wealth is not kind of comprehensive enough. So we see maybe partial checks of the funds in question, or we see that source of wealth, for example, is not really concentrated on. Sometimes that kind of element of it is neglected a little bit, and sometimes the definition of the two is a little bit confused. I'll very quickly say that source of funds is the kind of money, the specific money for that particular transaction. Source of wealth relates to the client's kind of wider economic profile, if I can put it that way. So yeah, so I think source of funds, source of wealth, that's probably highest. Next is probably risk assessments. As you're probably aware, there's a lot of places in the AML regulations which require that practices need to do proper risk assessments, and you can really consider it the foundation of firms or practices approach, because I think if you're not risk assessing properly, then you're not going to be able to discharge your obligations properly. So for example, if you think a high risk matter is low risk, for example, then you're not going to take the kind of commensurate action in order to discharge your obligations. I guess some of the issues that we see are practices just maybe they don't have matter risk assessments at all. It's probably got a bit better recently. We see practices are starting to kind of bring this in. However, some of the risk assessments we see are perhaps not comprehensive enough. Maybe they don't take into account relevant factors. For example, if the client is politically exposed, or if the transaction itself is overly complex, if it's something that's far outside the normal appetite or transaction range of the practice, or something like that. So I think as time goes by, I think we're moving on. We're moving in a positive direction, in my view, in terms of risk assessments. And now we're getting into kind of looking at what the practices are actually doing and giving them comments and feedback on that. So I think probably those are the two most frequent, let's say, areas of non-compliance that we see within the kind of AML sphere.
There's a huge amount to unpick in all of that. And I've got, in the back of my head, I've got conveyancers screaming, I'm not the police, this is not my job. This has been foisted upon us as a profession. But before I go down that route, let me ask you about risk assessments quite specifically, because there was an SRA warning notice about non-compliance. And again, that came up very prominently in the warning notice, didn't it? Talk to me about what your expectations of what a risk assessment should be, because that seems to be a big issue for firms.
I think from our perspective, there's two levels really that we're looking at. So the first is the wider practice-wide risk assessment, or PWRA as we call it. And that really is looking at your practice as a whole and trying to look at each of the services that you provide. So as we were saying earlier, some CLC practices might be doing conveyancing and probate. There might be some permissions for various work, which could be relevant. Looking at those services and properly scrutinizing them and coming to a conclusion as to the level of risk. And when you're doing that, taking into account what the national risk assessment says, what the CLC's sectoral risk assessment, which is I would say a really good resource for practices if they want something which is a bit more tailored to the services that we regulate. Obviously, I think that the national risk assessment, there's a little bit of a tendency not to focus on things like probate. So if you were to look at the government's national risk assessment, you won't find too much in there. So there's really a number of kind of resources which practices should be looking at when they're doing their risk assessment. And so we'd expect that they identify their services, come to a reasonable conclusion based on what kind of clients they encounter, how they meet their clients, geographic location of the clients. There's quite a few kind of areas which we would expect to see in that practice-wide risk assessment. And I think maybe the best guides that I can give is that we do have a template in our AML toolkit, which practices are very welcome to go and take it. And it's got exactly the things that I've just been referring to there. So things like geographic risk, client risk, services, that kind of thing, so that they're absolutely free to take it and adapt it for their own practices. And indeed, when we go out on inspections, we do see a lot of practices kind of using that template. So I guess it is a useful tool for practices to use, and it gives I hope, quite a clear idea of what they're expected to do.
Let me come back to you on that though, because that was one of the criticisms, and apologies for going back to the SRA note. I realised that we're talking about the CLC, but that was one of the criticisms of this warning note, was that these templates are not sufficient. They're not, and you talked about firms needing to amend them and edit them so they're relevant to them, but they're not doing that enough.
I think in general terms, we've seen a lot of more positive examples of practice-wide risk assessments. I've reviewed quite a lot recently as part of a thematic project, and I think that they were really good, actually. They were looking at a lot of aspects, and they even kind of went beyond the template that we provided to them. So I think from what I've seen, the kind of message is getting across, and practices are kind of responding appropriately. And I think it's important to say, because I don't always want to just be negative and say that, oh, it's all this non-compliance, but we've seen examples of really, really good compliance, risk assessments which are beyond criticism. And that's particularly in relation to a project that I've just been working on to do with trust in company service providers. We're going to publish a report very soon on that, actually. We've been keen to highlight the good practice in there as well, just so, other practices can see that and know that we're identifying that as well, and not just kind of emphasizing what's going wrong all the time.
Can you share some of the best practice that you've picked up from these examples?
I can come to the client and matter risk assessments. I think one of the outstanding kind of examples I saw was a practice that was doing like a 3-stage matter risk assessment, which I thought was appropriate. We wouldn't say to practices that you must, adopt this. We obviously ask that they have a client matter risk assessment, and we've got a template. But this particular practice was making sure that the risk was being assessed at the outset of the transaction, and then during the transaction as well. Because there, as you probably well know yourself, that a lot of things can change in conveyancing transactions, and of course, we know all the good work that conveyancers put in, and all the difficult circumstances that can arise. Sometimes we've seen conveyancers having to reconsider source of funds completely. Sometimes the client might turn around and say, actually, I'm going to fund it in a completely different way. It's going to be like this. And then the final stage of their risk assessment was just before exchange, which we thought, it's also an appropriate juncture, to have that final risk assessment at that point. I think once you get to the exchange point, obviously you're barreling towards completion then. So Yeah, that was one example that I thought was really good. And then when I was doing the file reviews, I thought that all the relevant risks which I expected to be in there, some of the things which we referred to earlier, were certainly evident there. So yeah, that's something that I would emphasize that was really good.
Talk me through some of the misnomers that exist around what conveyancers are supposed to and not supposed to do when it comes to anti-money laundering, because there's this idea that you have to turn the work away or that you have to drop the client midway through the transaction, or you have to have submitted a suspicious activity report at a SAR. What do conveyancers have to do and what do they not have to do?
I think I would start it off by saying that the obligations really come to client due diligence. So establishing that the client is who they say they are. And I think it can get a little bit tricky sometimes, but what falls under that umbrella of CDD are things like establishing that the client is who they say they are. And of course, things like source of funds and source of wealth, they all kind of fall under that umbrella. I think what the regulations certainly say is that if you cannot complete client due diligence, then you must terminate the business relationship or terminate the business transaction. It really puts it into the court of the practitioner or into the conveyancer. They need to, and I have to say, we do get this question quite a lot. It is sent, for example, to the CLC's mailbox asking, is it appropriate to terminate it at this point? Really, it's a matter for the practice themselves to consider, do we have sufficient information to be satisfied of the two elements that we were talking about? If they're not, then the regulations are pretty clear that the transaction should end, and also as you've highlighted, that you should consider at that point making a suspicious activity report. I mean, it might be that the circumstances don't give you a suspicion of money laundering, and there are some circumstances maybe where you can't complete client due diligence for other reasons, and it might not lead you to form a suspicion or something like that. So really, practices need to think at that point: is this something that we need to report? We expect all practices to have kind of internal procedures for that. And it is, I'll finally say on that, it should be borne in mind that the test, which comes from Proceeds of Crime Act legislation, is both subjective, which is if the individual knows or suspects, but it is also objective as well, which refers to whether there was reasonable grounds for knowledge or suspicion. In my view, the combination of these two tests, it presents quite a difficult challenge for practices, and indeed for the CLC as well, because in some situations we would make suspicious activity reports if, for example, we were suspicious that money laundering was taking place. Then we would make a report to the NCA. With respect to the subjective test, I thought it would be helpful just to kind of outline some guidance that the National Crime Agency has provided in relation to this. And although it's not defined in legislation, there has been quite a famous legal case which discussed this, which is R versus De Silva, which was a case decided in the Court of Appeal. It provided some assistance in defining suspicion, and it said that it was, and I'm quoting here, a possibility which is more than fanciful that the relevant facts exist. And maybe even more helpful than that is they also said what it isn't. And I'm also quoting here, they said that a vague feeling of unease would not suffice. So when practices are kind of considering suspicion, they might have regard to that particular kind of legal case, which I think is quite helpful in providing a little bit of an indicator as to when you should be making the report. Just moving on to the objective test, as I said earlier, there is an objective element to this as well, and it's possible that an offence may be committed if a person should have suspected money laundering. So really, the CLC would say to practices, you need to be very careful when you're considering whether to make a report. So you don't just base your decision on whether it's, you actually know or suspect something has taken place, you also must look at it from objective grounds as well. As I said earlier, I realize it's a difficult challenge, even conceptually, to take on. And of course, if there's any questions that any practices have, then we're more than happy to help anyone out. And each practice has a regulatory supervision manager, so we'd ask that if you have any questions at all, then don't hesitate to contact the CLC and we'll see what we can do to help. Just finally, on this point, I'll say that in the first instance, it is a matter for the practice as to whether a report should be made, having regard to their own internal policies and procedures, having a look at things like, what are the warning flags for money laundering and that kind of thing. We're also in the process of doing another thematic report this year, which will be in the area of suspicious activity reports. So we're very much hoping that we have some new content and guidance to send out to practices.
Well, once we get part way through a transaction, and let's take the example of the firm that's doing a secondary check midway through the transaction, and perhaps the source of funds changes, or perhaps further evidence presents itself that creates greater suspicion. By terminating the work at that point, we risk tipping off the client that we may be onto them. Again, what's the kind of guidance around that?
In terms of tipping off, I mean, it's a very specific offence. If I'm just recalling the regulations, I think it says something like you can only tip someone off if you've made a referral to the National Crime Agency. So if you've made a SAR, or if you tip the client off if there's an active investigation or something like that. So I would certainly say, if you look at the LSAG guidance, and that's the Legal Sector Affinity Group guidance, which is the kind of agreed position of all the regulators, it's got some very specific content as to that particular question. And really those kind of things, like, I mean, some conveyancers might also ask, well, look, if I keep asking questions, am I tipping the client off? Are they going to be suspicious if I start asking them, hold on, not too sure about what you've submitted here, can you give me more information? So there is a lot there, and it says something like, if you do take the points further or you want to ask more questions, that would not constitute tipping off under the regulations. Equally, if you were to terminate the business relationship, that wouldn't constitute tipping off. It's a very kind of specific offence, if I can put it that way.
I realise you're getting a bit of a grilling here, so I'm going to move on to the LSAG guidance, because that has recently been updated. It's still pending approval, but what are the key elements of the addendum that is worth communicating right now that's likely to be approved?
There's some sections relevant to client due diligence, that we've just been referring to. So there is a relevant section on source of funds, and it hones in on a very specific problem, which I guess a lot of the regulators have seen, and that's something that we've actually referred to earlier, where you've got a third party or a gifter contributing some money towards a transaction. What kind of checks should be undertaken? And one of the points that's been made in the addendum is that you should be checking the source of funds and, where applicable, the source of wealth for any individual who's contributing money, really as if the same checks or the same level of checks that you're carrying out on clients themselves. And I think it's quite a welcome addition, because there was nowhere in the regulations that was crystal clear about that point. So we did get queries from practices. So it's just something that gives a bit of clarity in that particular area, and I think it should be helpful for practices going forward.
We've talked about the conveyancer, and as I say, they're screaming at me that they're not the police, and I appreciate that the regulator is only doing its job. What are the main challenges that you as a regulator face in terms of how you're delivering regulation around anti-money laundering into the conveyancing sector?
There's quite a few challenges, I would say. I think the first one that kind of comes to my mind is making sure that we are discharging our own obligations, and one of them is making sure that we give appropriate information and guidance to our regulated sector. And I mean, I will say that there's so many changes to AML. It is a challenge to kind of keep up to date with them. There's no doubt about that. And we have, for example, something I just wanted to highlight was the list of high-risk third countries, which seems to change, really kind of frequently. So we've put something up in our AML toolkit which links to, that core piece of legislation which has been updated something like 6 or 7 times since March 2022. And now we've had a recent one in December as well. So that's certainly one of the challenges, is just trying to kind of keep on top of it. Of course, the LSAG guidance addendums, we've also got legislation. So the Economic Crime and Corporate Transparency Act, which gained assent, I think, towards the end of October last year. So it's just a challenge to kind of get that all together. And also I'd say trying to tailor what we do to the practices that we regulate. So as we were saying earlier, look, some practices do a lot of trust work and probate work. I'm very conscious now that we need to make sure that, the content that we're producing reflects our kind of regulated sector. I think maybe some of the guidance we've produced in the past is very focused on conveyancing, and what I want to do going forward is make sure that we focus on those other areas as well, and make sure that all practices basically are covered off and that they're getting guidance that's appropriate for what they're doing.
Are you talking with the professional indemnity insurance community and getting them to buy into some of the improvements that you're seeing? Because firms are still paying huge premiums to do conveyancing.
I would say that PII isn't my specific area of focus, and to my knowledge, AML is not really an area of specific kind of concern in relation to PII. That may change in future years, and we'd be certainly happy to address that. However, I think overall, PII has been an area of concern for the industry over the past couple of years. As such, colleagues of mine at the CLC have been proactively meeting and working quite closely with brokers and insurers, which resulted in what we would say was quite a successful 2023 renewal round, particularly when you compare it and look back a little bit to, say, 2021 and 2022 as well. I think at the moment our view is that we don't have really strong concerns about PII at the moment. The recent reforms are bedding in well in the CLC's view, and I know from conversations with colleagues that we aim to repeat those meetings again in the coming months ahead of the 2024 renewal season, where we expect to see continued improvement. And we'll build on some of the reforms that have come in place. And I think one of the key ones was the introduction of a requirement on insurers to notify practices of any intention not to review terms a minimum 3 months in advance of the 30 July deadline. And we've seen quite a bit of evidence that that's been quite a positive development for practices. It's given them a lot of time to be able to, negotiate alternative insurance or to negotiate the terms or, something like that. So there are steps we're certainly taking which are trying to improve the situation.
Do you see that the role of firms or your own role will change significantly over the course of the next 12 to 24 months? You've talked about this moving feast that AML is, but do you see that what you do and how you police it will change significantly over the course of the next few years?
I don't think so. I envisage the kind of current, let's say, system or current monitoring regime to kind of continue as it is. I mean, there certainly will be kind of tweaks and refinements as we're going forward. One of the things that we're starting to do is more AML focused reviews. So we're doing very specific work, which is tailored to the obligations around AML, which, as we've said, are multifaceted and varied. So there's certainly kind of going to be improvements that we're going to do. Of course, we're going to try and bring in as much guidance as we can for our supervised population as well. But maybe one thing that I can highlight is that there will be a new national risk assessment. So we've been working on this one, which has been dated 2020 for some time. And it's probably a little bit overdue, that the risks, the money laundering risks, need to be refreshed in the conveyancing sector. Of course, we'll be happy to work with the government if they want to reach out to us on anything like that, but we expect that to come in. And depending on the kind of outcome of that risk assessment, that could have some, repercussions for how the CLC structures its monitoring going forwards, because the national risk assessment is really the kind of foundation for, a lot of the concerns that individuals have for property transactions in money laundering.
So you anticipate you'll still do this mix of desktop reviews and in-firm reviews?
Yes, yeah, absolutely. I think we do have a monitoring program which usually starts in January, February. So we expect that we're still going to be doing a lot of on-site visits as well. I think, of course, during COVID that reduced quite significantly, but now we're kind of getting back into our stride, if I can put it that way. And we want to, and probably our preference is to see kind of practices face to face. However, we are trying to be as flexible as we can be, so we can undertake these remote inspections and things like desktop reviews, as you say. And so we're still going to be kind of looking at those two elements, and we also do other like a wide range of other things as well. Like we look at reconciliation documents as well quite regularly, and that means sending in your client account bank statements, your matter listings, and all that kind of thing. So we do keep quite a sharp eye on that, and we do see sometimes that client accounts, which are there's certainly a risk factor for money laundering if they're abused or if they're being used as a banking facility or something like that. So that's something that we will be keeping an eye on, and practices can expect us to continue requesting their reconciliations at periodic intervals.
But if that's one practical thing that we can take away from today in terms of how firms can be prepared for what the next 12 to 24 months holds, what are the other things that not just CLC firms but law firms that undertake conveyancing transactions need to be doing now to remain compliant, Sebastian?
I could go on for quite a while here, but I think one element is maybe something that we've mentioned already in this podcast, and that is make sure you're assessing risk properly, because that really is the foundation of everything. If you're good at assessing risk, you've got a good system, good processes, your staff are well trained, they know what they're doing. They can immediately recognize if a client is established in a high risk third country, or they immediately know if a transaction is out with your normal, appetite for transactions or something like that. Then I think that is a lot of the battle is there, if I can put it that way. And a lot of that kind of trickles down to, what you do in other areas, because how much risk you find on a particular transaction, that's going to dictate how much, checking for source of funds that you're going to do. So, for example, in high risk matters, we'd expect there to be more evidence obtained, for example. So it's really that's probably the most important thing that I would say. I think another area I would focus on is make sure that you're doing like an independent audit of your practice. We would say don't just rely on when the CLC comes in to check that what you're doing is appropriate. I think a good compliance culture is getting an objective perspective or point of view on what you're doing prior to any regulator having to come in or doing an inspection or something like that. And we've seen some practices really kind of, again, to highlight good compliance, there's some practices who really are using independent compliance organizations really appropriately, and you can really see it in the quality of the documents. Like the AML policies are really thorough, and we've, virtually got no comments at all to make, in those kind of circumstances. And I think just finally, I would say you use the resources that are available. So we do have the AML toolkit. So just encourage practices to kind of go in there, have a look around, and you can take what you want from there. And also, if you have any kind of AML queries, you can send them into the CLC. And each practice has got a regulatory manager, and we're very happy to, consider AML questions. And there could be situations that you find yourself in which perhaps you're not sure about how to proceed. And yeah, we are happy to kind of consider that, and we'll try and be as helpful as we can in responding.
And I know it's not strictly AML, and we've talked about it earlier in the podcast, there is this issue with sanctions as well. And I know pre-Christmas you actually released some further guidance around sanctions. I mean, I guess very, very quickly, because we've not got a huge amount of time left on the discussion, how does that impact AML and what do firms need to be thinking about?
We think that sanctions is relevant to AML. There is certainly an overlap, which I think other regulators have identified as well. So if you look at the Solicitors Regulation Authority, if you look at their kind of risk assessments as well, in these areas, there is a bit of an overlap. And we would say that it does need to be kind of taken into account, because sanctions create an incentive for individuals to seek to launder money. So it can be kind of relevant in this area. And we also have to take into account that a lot of countries are not only on the high risk kind of third country list, which, as we've said earlier, is changing all the time. A lot of those countries are also on the financial sanctions list. And then you have tricky situations where countries are not on the high risk third country list. And I think Russia is an example of that, which is a bit of a surprise. However, that country is on the sanctioned list. So there's a bit of an overlap, and there's an interaction between the two regimes, which we would like to kind of highlight to practices. And it is certainly a challenge to keep up to date, but we would say to practices, make sure that you're updating anything as it comes in. If you sign up to the Office of Financial Sanctions Implementation OFSI website, then you get all of the changes as they're happening. And they also have tools that you can use to search through the sanctions list. It probably is becoming quite difficult to do it manually, so we would suggest to any practices who are still checking sanctions on a manual basis, make sure you're using the tools that OFSI provides you, because they've got a search tool which is much more kind of powerful than just searching through a spreadsheet with, I don't know how many names there might be on there now, maybe 12,000 or perhaps more than that. So absolutely use that, and also be very aware of when the sanctions regime applies, which is essentially to all work versus work that is in scope of the AML regulations, which is a little bit different, than the work that the sanctions refer to. And a lot of them as well. You can also say that at the heart of both of the regimes is you're trying to understand who your client is. You mentioned know your client earlier, which is fundamentally important, and trying to find out whether the transaction makes sense. And that's the kind of commonality that you find between the two regimes. So we'd just like to kind of highlight those points.
It's very difficult to do anti-money laundering justice in a 35 minute podcast. And I appreciate we've kind of talked around a number of topics today, but the message that I'm getting from you, Sebastian, is that there's a huge amount of information out there that you can go and get some quite detailed guidance on, and that guidance is improving all the time. So thank you very much indeed for joining the podcast and for sharing your insight.
No problem. Thank you very much, and thanks for the opportunity to speak to you today.
The Today's Conveyancer podcast is available on your preferred podcast provider. It's also available on todaysconveyancer.co.uk. My thanks to Sebastian. Thank you as ever for listening, and we'll see you again soon.
You're listening to the Today's Conveyancer podcast, the leading source of information for residential property lawyers in England and Wales. Don't forget to subscribe and sign up to our free newsletter at todaysconveyancer.co.uk. You can also follow us on LinkedIn and Twitter.